Hello traders and welcome to another video review. Today is Tuesday, March 12, 2024. Let's find out what's going on the Forex economic calendar today. As you can see, I got the medium and very important data releases. And what do we have here? Data from the Asian session. BSI large manufacturing conditions from the Japan deteriorate to minus 6.7%, and the building approvals in the Australia are on the same level of minus 1%. Interesting data from the UK. Climate count change 16,000, which is way in the forecast of 20,000. Employment change on a quarterly basis is minus 21,000, and the unemployment rate increases from 3.8% to 3.9%. Data from the Germany in form of the German CPI are in line with the expectations that the CPI increases from 0.2% to 0.4% as expected. The monthly CPI decreases from 2.9 to 2.5%. Please remember, today is still the Eurogroup meetings, which is why the Bank of England MPC member will give a speech at noon, and 1 hour later we got the OPEC monthly report. During the New York session, we got the core CPI data, this time from the US, of course, and the CPI data at the same time. The CPI is expected to increase from 0.3% to 0.4%. At 5 o'clock we got short-term energy outlook, and then we got some speeches. 5 o'clock, German Buba, the Vice President Buch, will give a speech, and then Buba Balz will give a speech 1 hour later. At the end of the day, at 6 o'clock, we got the 10-year note auction. Then 1 hour later, federal budget balance, and half past 9, we got the API crude oil stock changes. So pretty intense day. CPI data, consumer price index data scheduled for release. They might be a very good proxy for the inflationary pressures. So it's worth to keep an eye on them. Nevertheless, because of the data releases that took place already in form of the climate counted and unemployment rate from the UK, we are going to take a look at the British pound for sure. Let's start as usual with euro dollar, and then we will switch to the British pound. For our chart of the euro dollar is showing us a very interesting correlation, very interesting behavior, and the correlation is between the market geometry levels. So 1 to 1 market level, and so basically the A, B, and C 1 to 1 level is located at 1.0987. The last high was made at 1.0982, so 5 pips below this measure. So we might see very clearly something that I was talking about many times before. The whole movement here on the euro dollar. Where is my lead wave? There you go. The whole movement on the euro dollar looks like ABC, and now we even have the 100% market geometry relationship between the length of the wave A and the length of the wave C. We got bearish engulfing and kind of a pinwheel pattern here at the spike to the upside. We broke below the demand zone. Now demand zone is looking very weak. Let me just extend my old demand zone, which was very nice for bulls, because this is where the wave C started. So I'm moving my demand zone labeling here. This zone doesn't actually look like a demand apparently. Let me just move my lines a little bit higher so I can show you guys. This is the bearish engulfing, right? So this is the top of this move, and now it is resistance. So this is the technical resistance. Bearish engulfing is here. The whole movement looks like the ABC to the upside, and of course in this situation we should expect downside movement. We can apply some kind of a channel to the euro dollar as well. Let me just find the let's say we are going to apply the usual regular channel. We won't make it you know, any kind of let's say complicated. So from the lows of the wave A through the lows of the wave B, we can of course move it a little bit lower here, so the low of the wave B might be located here, and the highs of the wave C. Is that enough for this channel to take it up a little bit higher there? So there you go. As long as we move inside of the channel, the outlook remains slightly bullish. However, due to the ABC correction, we might see some sort of the downside developing soon. Cable, as we expected after ABC correction to the upside was done, is reversing strongly. Bearish engulfing pattern that I mentioned yesterday is still in place. We are below the key technical resistance again, but now this key resistance will be moved higher because we got the confirmation that this is the top for the wave C. So the same situation that it was on the euro dollar, this is the same pattern, and now we are basically approaching the supply zone. Right now it will be of course the demand zone. Let me just zoom out for you guys to see this internal trend line. I'm not quite sure whether this internal trend line, I'm talking about the orange one, will be any good for now. I'm not quite sure if this line will provide any kind of a nice support. Nevertheless, we are coming of the extremely overbought conditions, hitting the level of 50 on the RSI on a 4-hour chart, which means that we will most likely test this trend line. If we break below the orange trend line, then top is in place and we should go towards 1.2709, 1.2690 level. Okay, and this trend line will not be necessary anymore. Let me just move one line higher. Let me just move one line a little bit higher because I want to place it somewhere, as you can see, where at the close of this candle. So this is my new supply zone, which is pretty solid because plenty of the activity took place there. Okay, so this is our new supply zone. I will just move it a little bit to the left as well. There you go. And now this is of course just the technical support, so let me just switch it to the green, and that's not a problem whatsoever. We got the technical support. We should bounce and move higher, right? If the ABC pattern was not obviously present here. Okay, let me just remove all of this labeling, so you guys will have a little bit more of the space on this chart, so you can see what's going on. Shooting star and all of these patterns are no longer applicable for our analysis, so let me just leave you with this bearish engulfing. That's the most important pattern right now. We are approaching the trend line. Please keep an eye on the trend line. We might see some bounce, we might see some action here. If there's a breakout lower, then it indicates that the market would likely be following the bearish path. And of course, if we there you go, this is the wave A high. If we break below 1.2707, this is the top for the wave A, then we got the confirmation of the ABC pattern is done, and this ABC pattern cannot be let's say labeled as the 1 2 3 4 5. So that's another confirmation. The market will eventually go even lower than the top of the wave A. I'm just playing with this let's say the lines here. This is the blue line here. We got the channel here. There you go. This is the corrective channel, typical technical channel here. We are approaching this upper blue line as well. So this zone between 1.2775, 1.2795, 20 pip zone is the crucial now for the bulls. If they want to keep the upward momentum, the market cannot break below this zone on the cable. 4-hour chart, remember. Now, because we talk about a lot of the recent developments on the gold, let's just find out what the gold is doing, and we got another all-time high on the gold. So we keep doing this typical pattern during the uptrend. The pattern is, of course, the staircase pattern. We go up, correction, we go up, correction, up, correction, up, correction, up, correction, up, correction, up, correction, up, correction. Repeat to infinity. This is how the strong uptrend is being formed on the gold 4-hour time frame chart. Of course, on the daily time frame chart, you can see it on the macro scale as well. The recent high, $2,194 per ounce of gold, made during the extremely overbought market conditions. Now we just slightly coming off this these levels. Nevertheless, the outlook is bullish. There is no sign or clue that the uptrend is about to be terminated or completed. More upside for gold should come very, very soon. So the outlook remains bullish on gold. In the same matter, let's just take a look on the S&P 500. As you can see, there is the similar situation here. S&P 500 trending strongly up. We got the upstep correction, upstep correction, upstep correction, upstep correction, upstep correction. Typical secular uptrend is being continued on the S&P 500. The outlook remains bullish. We passed the 5,000 points mark long time ago. Now the technical support eventually that we might consider it very interesting is located at 5,047 points. As long as we trade above this technical support and above right now 50 periods, 100 periods moving average, the outlook remains bullish. We got some the bearish engulfing pattern. Yesterday we got some pullback, but as I said, the stairway pattern is being repeat all the way up, just as it's supposed to be done during the uptrend. So there is no indication S&P 500 uptrend is about to terminate or to be completed. Bullish outlook on S&P 500 as well. And last but not least, let's take a look at the king of the recent markets. Let's take a look at the Bitcoin. What is going on here? I moved the wrong I moved the wrong level. 75,000. It's my level of choice for the next target for the bulls. It's obvious why, because it's a psychological level, round number, which is why I'm choosing this this level, because we don't know where we go right now on the Bitcoin, right? Because it's uncharted territory. So we are going by the psychology. 72,874 is the recent swing high, all-time high, yearly high, decade high, or whatever you want to call it, on the Bitcoin, of course. And the market keeps moving higher. There was a bullish engulfing. There was a very nice correction here. I don't think there is any bullish engulfing pattern here apparently. We might see some kind of a pin bar here. There you go. That's this candle on a 4-hour chart. Even if we zoom out, there is nothing else to be said and done about this situation. We go up, correction, we go up, correction. Of course, the volatility is way bigger than on the traditional markets, but hey, this is crypto. Nevertheless, the Bitcoin market is on the steady rise towards the next target, located at $75,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Next time we will see each other and speak about the possible scenarios on the Forex markets as usual. So for now, take care and bye bye.